Warsh's first Fed meeting just rewrote the AI megacap discount rate. Half the committee now sees a hike this year, plus 4 more stories rattling the tape. Let's get into it. Warsh's first FOMC left rates unchanged at 3.5 to 3 3/4, but the median 2026 dot ratcheted 40 basis points higher to 3.8%. And 9 of 18 committee members now see a hike as more likely than a cut this year. The Nasdaq closed down 1.34%. Microsoft, Meta, Google, Amazon all read into the bell. For long-duration AI megacaps that did the heavy lifting in 2026's rally, the discount rate math just changed direction. Warsh also stripped Powell-era forward guidance and ended the statement with a single line. The FOMC will deliver price stability. The bear case is direct. If Warsh follows through on even one hike, the AI multiple compression bulls have called a low probability tail becomes the base case. The forward signal is Thursday's tape. Nasdaq futures opened plus 1.62%. If that fade the hawk bid sticks through the cash session, the dip buying reflex is intact. If it doesn't, this was the regime change. SK Hynix announced this morning Seoul time that it has begun shipping HBM4E samples, the memory generation that anchors NVIDIA's Rubin platform, to its major customers. Pin speed jumps to 16 gigabits per pin. Capacity stays at 48 gigabytes in a 12-layer stack, and power efficiency climbs over 20% versus HBM4. This puts Hynix ahead of Samsung on Rubin qualification. UBS already pegs SK Hynix at roughly 70% share of NVIDIA Rubin HBM4. With Rubin volume now shifting into 2027, today's sample milestone is the first hard timeline data point that the HBM4E to Rubin handoff is actually on track. The bear case? Rubin volume is a 2027 story. If hyperscaler CapEx digestion hits before then, exactly what Warsh just signaled, this ramp arrives into a softer demand backdrop. The forward signal is NVIDIA's June 24th annual meeting. If Jensen reiterates Rubin cadence, this Hynix print becomes a buy-the-dip catalyst. If Rubin guidance slips a quarter, the supply chain re-rates lower. Reuters and the Information Report. Qualcomm is in advanced negotiations to acquire Jim Keller's Tenstorrent for $8 to $10 billion. Qualcomm has 0 data center accelerator footprint today. Tenstorrent ships the Galaxy Black Hole rack, 32 accelerators, 768 RISC-V cores in 6 rack units. A closed deal hands Qualcomm a full RISC-V plus chiplet plus compiler stack purpose-built against NVIDIA inference dominance. This is Qualcomm's second RISC-V acquisition after Ventana Micro in December. The read-through, the post-NVIDIA accelerator stack, is consolidating into a real second pole. Qualcomm, Cerebras, hyperscaler custom silicon. The bear case, $10 billion for pre-revenue silicon, doesn't always close. Terms can move, regulators can push back, and Qualcomm has historically struggled at large M&A. The forward signal, if the deal signs before Q3, it sets a comp floor under every RISC-V AI startup and pressures NVIDIA's inference moat, right as SK Hynix ships the next memory node. NVIDIA closed Wednesday down 237% at $207.41 on the Fed shock. But Thursday pre-market, it's bid back plus 0.48%, and the analyst stack hasn't budged. Strong buy consensus across 38 analysts, average price target 298.87, implying 44% upside. That divergence, Fed hawkish, NVIDIA bid, is the whole AI trade in microcosm. The market is voting that Rubin economics matter more than the funds rate. AMD is corroborating. Bernstein lifted to 600, Citi upgraded to buy at 575. BOFA at 560. The sell side is leaning into the accelerator names, not away from them. The bear case is timing. NVIDIA is already down 9.117% over the trailing month before the Fed hit. If Warsh's hike actually lands, this strong buy book gets stress-tested at lower levels. The forward signal is the June 24th annual meeting, same week as OpenAI's GPT 5.6 release. Reiterate, Rubin cadence, and the SK Hynix sample print, plus the Qualcomm 10 store and deal both become bullish read-throughs. SpaceX took its first down session since the June 12th IPO debut, minus 5% Wednesday into the high 180s. The stock had tagged an intraday all-time high of $225.64 on day 2, just one session earlier. Today, it's trading at 191.882 with an intraday range of 187 to 222. The volatility band has roughly doubled. A former NASDAQ chief publicly flagged that SPCEX is, quote, not trading on fundamentals. For AI investors, this matters because SpaceX has been the de facto risk barometer for the AI and space IPO summer. Anthropic and OpenAI both have S1 paths watching this tape. Pricing decisions and lockup structures get written off this comp. The bear case. This is the first crack in the IPO window thesis, and it's arriving the same day Warsh tightened policy. The forward signal. Watch 187. Wednesday's low. A clean hold turns this into healthy consolidation. A break tells you the post-Fed risk-off bid never came back, and the OpenAI IPO calendar slips. The through line today. Warsh just changed the duration of the AI trade, and the names that win are the ones with hardware milestones the market can underwrite. Hynix delivered one today. NVIDIA gets its turn next Wednesday. Subscribe for tomorrow's read. I'm Ted. This is the Daily Alpha.